the staff, management, or ownership of this station.
It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today.
Go Stros, I like your shirt.
You like that?
I do.
Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817.
All right, Jay, stand by.
Okay.
Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Jason Bible, Right Path Real Estate. 713-785-1817. We're also on Facebook. We're running Facebook Live and YouTube Live, but we only, truth be told, we only check the Facebook feed. That's where all the action's at anyway. So, Facebook.com/Right Path Real Estate. I had an exciting weekend. We were at the Astros game on Friday and on Saturday. Had a great time. Took some friends Friday night. Took the boys, a.k.a. the dudes, our two sons, on Saturday. Had a heck of a lot of fun. Hope everybody's saving up your kitchen passes for the World Series. Games looked absolutely fantastic. We had a great time. We'll have a little watch party, just the family, at the house tonight. So, heck of a lot of fun. Also on Friday, probably more important than the Astros winning, is our blog went out. And the blog is all about opinions that matter. I step headlong into the NFL controversy, which I really don't see it as a controversy. But in any case, so I talk in the blog about opinions that matter. So here's one thing I would love to see. I would love to see a business student out there. Someone who's looking for a good project. Let's say they're maybe a PhD in some kind of business somewhere. They're looking for a good dissertation, a good thesis. And that is this. And I'll talk a little bit about sports, the NFL, and then we're going to get into real estate. We're going to talk about how to build wealth today, how to build real wealth. Like not just go buy some houses and kind of think you're building wealth. I mean, real wealth building. What we do here and what we teach, what we train people on in Right Path, how to build real wealth. Before I want to get to that, I want to talk real briefly about the NFL stuff. I would love for some graduate student out there to take this on as a project. The whole NFL controversy really started back in 2016. I want to say in the preseason with Colin Kaepernick. You can go and read Colin's original comments on why he took a knee during the national anthem. I find the comments pretty horrible, but in any case, that's not the point of the discussion. Not the point of what I'm bringing up now. What I would love to see is a graduate student in business sit down and calculate what would have been the cost if the NFL, when this first started, fired everybody who kneeled, regardless of their superstar status. What that would have cost them in lost revenue, in jersey sales and T-shirt sales, in viewership, versus the losses that the NFL and their companies experience now. I mean, if you look at what's going on at Disney, aka ESPN, it's a bloodbath over there. Now, not all that is related to the things that have happened over the last year. However, it does have a significant impact. I know how everyone loves to say this is a First Amendment issue. First of all, it comes right down to employee-employer relationships and money. It always comes down to money. It's fascinating. We were at the two Astros games this week. Not one person was taking a knee. It was real weird. Wonder why that wasn't happening. But from a business standpoint, I would love for someone to sit down and figure out. Now, you'd have to make a lot of assumptions, but it'd be really fascinating to figure out from the business standpoint If the NFL just walked in, nipped this in the bud, hey guys, you're not going to do this. You work for the owners. You work for the league. I love how everyone starts saying, well, what's the league going to do? The league is the owners, guys. The league is just a group of owners. That's what the league is. So from a business standpoint, I'd love someone to take on that project. Fire everybody starting in whoever, started the whole kneeling nonsense. Let's say you had to fire all those guys. Versus what's happening now. It's a great business case study. It's a great case study in marketing. It's and you guys know that's what I do in Houston House Buyers to get the deals that we're doing. I'm the marketing guy. It would be a fantastic case study in marketing. Because I can tell you where the errors are. The errors are in their target market, the NFL's target market. I mean, it's an absolute fascinating case study. And we'll continue to see these ratings issues on throughout the year because it doesn't look like it's abating. And the NFL, I think, is making one of the worst mistakes, and they're capitulating. You do not, you make a decision and you stick in the sand and you do it. And they're just, this is classic what not to do in business. There will be Harvard Business case studies, Harvard Business Review case studies for decades out of this. I mean, it's that colossal of a mess up from a business standpoint. Now, I didn't want to get into this until the business stuff started happening. In other words, until we started to see declines in revenue and things happening and fans revolting and all that kind of stuff. I like the business side of this. Where you fall on this, on whether it should be taking a knee or not, I mean, that's up for debate. But what's fascinating is the business side is not. And I'm really enjoying watching this whole thing unfold because it's going to be a great teachable moment for business owners, employers. This is a great moment. I'll tell you what, if Goodell, i.e. through the owners, just stepped out and said, hey, look, guys, we support your First Amendment rights, but at the end of the day, you're working for us. You're on the field, working for the team. You work for the owners, and you're going to stand for the national anthem, period. Now, there would have been a lot of the ESPN and all those folks would just be freaking out, and there'd be a week or two of, oh, you owners are horrible guys and all that. But the fans wouldn't care, and the checks would still come in. But the fact that they capitulated because they don't know what their brand is, or what the brand means to their target market, they're just it's absolutely imploding, and it's a great case study. It really is a great case study. All right, so check out the blog. Check out the blog from Friday. I talk about opinions that matter. I talked a bit about this briefly this morning on my Facebook Live video. If you go to Facebook, Jason Bible, go to Right Path Real Estate. I'll share that to the page where I talk about a bit about opinions that matter and opinions that don't. And I think a lot of people, and I'm branding this new thing. We hear a lot of people say, hey, we're in the middle of the information age. I think the information age is over, personally. I've thought the information age was over 5 years ago. I think we're now in the opinion age. This is the opinion age. Because all the information is there. This is one thing I love. Let's relate this back to real estate. People will tell me all the time, Jason, I can learn everything about real estate online and in the library. And I'll say, you know what? You are absolutely right. You can learn all this stuff online. What are you going to do when you get stuck? What do you mean what am I going to do when I get stuck? What are you going to do when you don't know what to do next? Oh, well, I'll just read some more. And who are those folks that are going to be giving you that information? Opinions only matter if they're given from people that have the results that you want, that they can prove. Here's one thing that's really interesting. You guys can see everything that goes on in real estate is public. Do you guys know that? Everything that goes on in the real estate business, in the real estate industry, is public. I don't know if everybody catches on to that. So when someone says, oh, I own 15 houses, great, what county? What do you mean, what county? Yeah, what county? What LLC do you buy them in? When we're asking for opinions, there are only so many opinions that matter. I worked for a guy for a few years. Brilliant guy. He's probably in his early 80s now. And as I was moving up the management chain, I remember having this discussion with him. I said, hey, I got all the staff now. And, of course, I'm getting all of these opinions about how things should be, right? Employees all the time. Well, this is how it should be, and it should be this way. And, I didn't work out well at the last company because they didn't take my ideas, and this is how it should be. Everybody's got an opinion, right? Especially as an employee. Then when you become management, it's a whole different deal. But this is how it should be. Okay, great. I used to sit down and would, as I'm this new manager in training, I'd sit down with my boss. And I'd say, hey, look, I got all these opinions. What should I do? And one of the best things he ever told me, he said, Jason, most opinions don't matter. Most opinions don't matter. Which sounds awful in our all-inclusive society that we've built here. My next question would be, well, John, why do only some opinions matter?
1 minute.
He said, because the only opinions that matter are those opinions that can get you the results that you desire. That's it. Everybody's got opinions. I'm getting opinions every day about Houston real estate. And I've gotten to the point now where I'm like, all right, so how many flood houses have you bought? None. Your opinion is worth about Zippo. Oh, but this is a really great idea. No, it's not. It's a great idea for you to try. How come you haven't done it yet? Opinions. Results are what we're looking for. Opinions or advice are the things that help us get us there. I'm going to talk more about this issue and how to create wealth when we get back from the breaks. Jason Bible, Right Path Real Estate.
Mike's off.
Investor loans offering up to 100% financing are still available. You just have to know where to look. Look no further than Noble Mortgage. Noble Mortgage is a full-service mortgage company that's been helping investors since 2003. Noble Mortgage offers up to 100% financing to investors that covers purchase, repairs, and closing costs. In addition to private money, Noble Mortgage offers conventional loans, FHA, and even no-income documentation loans for both residential and commercial properties. Call and ask about our 5-point guarantee, which includes free pre-qualifications within 2 business days. Call 713-680-8100 or visit noblemoney.com. That's noblemoney.com. Our team has over 50 years experience in the mortgage industry. Call us today, 713-680-8100, or visit us on the web, noblemoney.com, noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas.
It's a little weird on the radio show when you pull up Facebook and it
Do
says,
you have cracks in your brick,
people are watching
doors that
you.
stick, or sheetrock that's coming apart, then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Are you looking for an investor-friendly
1 minute.
general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done
I
fast.
do not.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
All right, we're coming back.
Again,
Okay.
that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
Call Jason at 713-785-1817 and look for us on Facebook Live at facebook.com/
Hot mics.
Real Estate.
Welcome back, Jason Bible, Right Path Real Estate. Somebody just sent me a picture of a kickoff of a number of NFL stadiums that were relatively empty as it relates to this anthem controversy. You know, I'll tell you what, it's all about knowing your target market. That's one of the things we talk about at the weekend retreat. A lot of these real estate gurus will tell you, oh, go door knock on pre-foreclosures, just randomly send out some postcards and yell letters and find motivated sellers. Market to motivated sellers. That doesn't work, guys. I'll tell you, I've been there. It does not work. Marketing for motivated sellers does not work. Doesn't work at all. They got to be motivated. And I'm like, no, it doesn't. That's not how this business works. You want to learn how to build a real estate business. You want to learn how to retire and actually have something of value. By the way, just got a note. I had to pull up FinViz here. I think Dow just hit 23,000. So everyone looks like an investing genius when everything is working out fine. But when there's a change in the market, whew, you think it's going to go to 30,000? About 40? Who knows? I do know this. If I buy enough rental properties, I can retire. I do know that. You can retire if you've got enough rental properties. Now, for you, what does that mean? Is that $5,000 a month? Is that $10,000 a month? Is it $100,000 a month? I mean, what's the number? What's the number to be retired? Let's talk about wealth. Wealth is created by 2 things. That's it. Just 2. Now, I will tell you this. If you don't have both, you're not creating wealth. There are a lot of people buying houses right now that think they're creating wealth, and they're not. Because they're missing one of these 2 things. You need equity. Gotta have equity. There are a lot of landlords out there buying houses, actually been buying houses since about 2012, that think they're building wealth, and they're not. You've got to have equity. And what is equity? Simple. It's the difference between your debt, meaning what you owe, and what the house is worth. And how that equity is created is directly related by how much value you bring to the transaction. What do I mean by that? Let's say house is worth $100,000. And you're all in after expenses, rehab, and everything for $90,000. You have, quote, $10,000 in equity. However, it costs about 10% to sell a house. So you really have no equity at all. You may have cash flow, but you don't have equity. You've got to buy real estate with equity in it. There's only one way to truly manage risk in real estate, and that is by paying less for it. The only risk management tool you have in real estate is how much you pay for the asset. That's it. So if you don't have any equity, you have got no buffer for risk. What happens if you need to sell that house? What happens when a tenant tears it up? You got to come out of pocket because you don't have any equity. You've got to have equity. Second thing you have to have, cash flow. Got to have cash flow. Meaning it's got to be producing cash if it's a real investment. I'm one of these old school guys. I hate the fact that most companies got rid of dividends. I think dividends are a great way to reward investors. It's so funny. I was chatting with somebody the other day, and they said, well, real estate's risky. And I said, why do you think it's risky? Well, because, it could go down. And I said, John, what else are you invested in? Oh, I got all my money in the stock market. Okay. I said, what's Google trading at right now? I had to look. Let me pull this up real quick. What's Google trading at? The old Goog. Google. G-O-G-L, a.k.a. Alphabet. Trading at $1,006 a share. If I were to buy that today, what would I pay for Google? I would pay $1,006 per share. I would pay full retail price, $1,000, $1,006 per share. I'm going to buy, let's see, I bought a house Friday. I bought a condo, I think. Condo or townhome, I can't remember. Near the, right off of Westheimer, near the Galleria. I think we paid, I'd have to go back and look. Let's say the number's $50,000. What do you think? What do you think those assets are trading at? I think they're trading at $150,000. So I bought it for $50,000, and it's worth $150,000. So you guys tell me where the risk is. I go to the stock market and I buy Google for $1,006 a share. What's it worth? $1,006 a share. Friday, closed a deal, bought it for $50,000, worth $150,000. Where's the risk? I mean, it probably needs $20,000, $30,000 in rehab. So let's say worst case scenario, I'm all in for $100,000. And the house is worth $150,000. On Friday, I bought it for $100,000. Guess what it was worth on Friday? $150,000. I have a 33% equity position. But if I were to buy Google today at $1,006 a share, what's it worth today? $1,006. So I'm explaining this to John. I'm like, John, what? You tell me. I get it. This is the first time you're hearing what I do and how I build all this stuff. And, you've kind of watched in the last couple of years I build this real estate empire. But you tell me what's riskier. A house I'm all in for $100,000 that's worth $150,000, or buying, 100 shares of Google for $100,000? And it's worth $100,000? What happens if tomorrow there's a 20% market correction? Well, you're losing 20% of your money through Google, right? If you decide to liquidate that position. What about that house I bought? I'm still in the green. In fact, here's the crazy thing. I can rent that house out. I bet I can rent it out for $1,500 a month. I'm in it for $100. PITI, principal, taxes, interest, HOA, vacancy. I know this one thing, this is not popular if you're going to sell real estate classes. No one talks about vacancy, but you do have a vacancy cost. And then there's a make-ready cost. I bet on a house I'm all in for $100,000, I bet it's $1,200 a month in expenses. And it rents for $1,500. We're going to make $300 a month. So in order to build wealth, you've got to have two things: equity and cash flow. In the example of Google here trading at 1,006. Oh, guys, it just dropped again. It was at a negative 0.16%. Now it's dropped 0.32 to 0.32%.
2 minutes.
So at Google at $1,006 a share, how much equity do you have? None. How much cash flow does it produce? Zero. How about that house I bought Friday? All in for $100,000, worth $150,000. We've got what? $50,000 in equity. What's it cash flow? Well, all of our expenses, including a mortgage. In fact, I didn't even use my own money. Google, I got to use my own money. If I'm buying Google, I got to use my own money. The bank lent me all the money for the house. So I've got $50,000 in equity. The bank note, it's probably a 30-year fixed rate mortgage at about 5 3/4, 6%.
1 minute.
Interest, taxes, HOA, vacancy, make-ready costs, cost to lease it up. Say it's $1,200 a month, and it's renting for $1,500. I'm making $300 a month. How much? Here's the other thing. Here's the third step people miss. The third piece of building wealth. How much money would I have to put into Google if I were to buy Google? 100%. How much money do I have to put in that single-family house? 0%. We get back from the break. We're going to talk about how to finance your way to wealth. This is Jason Bible, Right Path Real Estate.
Mike's off.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs.
You don't hear that every day.
I know, it's the strangest thing. It's like, I don't know, maybe the kids spilled something on it. I don't know what's going on. It feels like hamburger. I can kind of smell it like sitting here. All right, put that there. Yeah, I can't smell it.
Inherited a great investment.
It's so weird.
Problem is, you don't know how
I thought there was like maybe a lunch fell down in there. I don't know.
Maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Have you ever experienced the pain of trying to get MLS comps for your hot lead? If you've lost deals waiting for MLS comps, you can understand the frustration. How much would it help you if you no longer had to wait for a real estate agent to get you the info you need to close a deal? Propelio is a brokerage website that gives you
Jeff,
instant
I will
24/7
get to your
access
question
high-equity
here in a
lists
minute.
and comps with access to a network of the top real estate agents. Get an edge on everyone else. Get a free 7-day trial today by going to getmlscomps.com now. That's getmlscomps.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's
Hey,
281-915-0906.
Well, you know what? I'm going to
This
send you a
investment is
text.
offered
I
to
don't want to do it over
accredited
the radio.
Okay.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best
we
home
got 30
purchase
seconds.
ever.
Okay.
Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
This is Business 1110.
Call Jason at 713-785-1817 and look for us on Facebook Live at
right, Jay.
facebook.com/RightPathRealEstate.
Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. We're talking today about how to build wealth. And it's a two-pronged approach. And you need both these things. You need equity and you need cash flow. And I was talking during the break, before the break, I was on FinViz here, looking at the old Google. Uh-oh, folks. Since the start of the show, Google was at $1,006 a share. It's now down to $1,003 a share. A 0.4% reduction in value. Buying Google isn't retirement. That's not going to build wealth. It's not. But Jason, Warren Buffett invests in the stock market. No, he doesn't. Warren Buffett does not. Look at Warren Buffett's portfolio. Actually, if you want to read, do you guys know who Warren Buffett's mentor was? His last name was Graham. Wrote a book called Security Analysis. I think you could still buy the book. The book probably costs a couple $100. Last time I looked it up. He's really the one that started what he called value investing. And what Buffett really did is he bought stuff at book value. He didn't go out there. Buffett ain't going out here and buying at Google at $1,000 a share. He's not doing that. I can tell you that right now. He's not going in. He's not. Actually, a rumor has it he doesn't have a Bloomberg terminal. He still reads a newspaper. I don't buy that old folksy stuff for a minute. Actually, a guy I really like, if you want to read about Warren Buffett, I like Charlie, his right-hand man, Charlie Munger. He is a grumpy old dude. He's real gruff. So I don't buy this grandfatherly act for a second. You don't get to be that powerful by being just kind of this folksy guy, drinking his Diet Cherry Cokes and eating his hamburgers. I don't know. That guy is extremely bright and ruthless when it comes to investing. You think You think Buffett's going out there telling one of the folks in his office, "Hey man, fire up your Bloomberg. I need to order like, a couple thousand shares of Google today at 1,000. Oh, we're down to 1,004 a pop." He's not doing that. You gotta be kidding me. That's for the plebes. That's for the rest of us. Buffett says it every now and then. I'll see if I can find a video quote, and I'll see if I can drop it onto Facebook. Warren Buffett and diversification. It is a classic quote. Warren Buffett diversification quote. Diversification is protection against ignorance. It makes little sense if you know what you're doing. Boom. I was watching MSNBC when he dropped that bomb. He does it every now and then, and the financial media goes nuts. Diversification is protection against ignorance. It makes little sense if you know what you're doing. I hear it all the time. People are like, "Oh, I need to be diversified. I need to be blah, blah, blah." No, you don't. Not if you know what you're doing. Not if you know what you're doing. I just saw, I'll tell you what, to go back to sports. Who wants to buy the New York Giants right now? I think that surely someone's ready to sell, right? Or the 49ers. Oh my gosh, their stock couldn't be lower. I mean, there are some sweet deals. That's when you buy them. That's not a diversification play. When you go into something that's down in the dumps, I'll tell you right now, it's flood houses. I love flood houses. Why? They're on sale. Flood houses are just, and it's scary. It's scary for homeowners. It's scary for investors. What are those houses worth? We don't know. When it really comes down to it, we don't know what those houses are worth until they're sold on the retail market or until they're leased on the retail market. Until then, we have no clue what they're worth. None. Anybody that tells you, "I definitively know for a fact what those houses are worth," has no clue what they're talking about. We can make some guesses. We can say we think, hey, it's probably going to be, it could be 10% discount, could be 30, could be 100, who knows? Nobody knows until those houses start selling. It's total guesswork. We've got some property in an area of town that flooded. And I told our team, I was like, I don't know what they're worth, but I think a 15% markdown is reasonable. Here's the fascinating thing. There's two that are pending right now. One's flooded, one's not. Both need to be updated. And it looks like they're going to sell for more than what we bought this house for before Harvey. I don't think in that neighborhood we're going to see a big change in prices, but we don't know until they start selling retail. We have no idea. I'll tell you what, I'm buying houses in Bear Creek. You got a Bear Creek house that's flooded? Give us a call. Just Google up HoustonHouseBuyers.com. Come on by. We'll be happy to go out there and buy that house from you. Everybody's scared of Bear Creek. I'm like, we'll buy them in Bear Creek. We're bailing out homeowners. That's what investors do. We are the bailout team. If you guys realize that. That is the job of real estate investors. That's why I got so angry at the federal government in 2008 when they bailed out those banks. That is not your job, government. That's the job of investors. Oh, but Jason, the whole world was going to collapse. No, it wasn't. And shame on you, financial media, for perpetuating that lie. It's utter BS. The financial media took advantage of less sophisticated people and pushed Congress and the White House to bail out those banks. You shouldn't have done it, and you knew better. Part of the economic malaise that we experienced during the Obama administration was from those bailouts. Let them fail. Let the investors step in and pick up the assets. Is there a lot of pain? Yeah, but it's in a short amount of time. Instead of 8 years of nonsense. In fact, there's still a lot of this dead weight on their books. Just let them fail. Let the invest, and it's not even really failure. It's a reset of asset prices. That's what's happening in single family. We're seeing neighborhoods in Houston right now getting repriced. And I get it. If you're a homeowner that didn't have insurance, you're sitting there and you're praying for a miracle. You're praying that FEMA's going to step in and write you a check because your insurance company won't for the uninsured. You're praying that the county via FEMA is going to come in and buy your house out because it got flooded once. Or you're praying that some class action lawsuit about the dams, about the dam openings and flooding your neighborhood is going to work. And I'll tell you, the likelihood of those three things happening is pretty close to 0%. But I get it. People are holding on to some hope right now. I was at a networking event last Monday night, got to talk to a buddy of mine who's been in this business a zillion years. And I said, hey, he asked me, he said, hey, how far into this Harvey thing do you think we are? I said, I don't know. I think 15, 20, 25%. I think this thing will be over in 24 months, 36 months. And he said, you know what? I disagree. And I said, really? He said, look, I went through TSA, I went through Ike, which were much smaller than this. He said, I think we've got years of cleaning up after this mess, meaning from a real estate investor standpoint. And I thought, that's interesting. So then I started comparing notes. I started looking at what are some of the deals that we're seeing on the Houston house buyer side. And I think the people, the homeowners who are going to do the best right now are the ones that are selling immediately. Because I'll tell you what, whether he's right or I'm right, we know the next 24 to 36 months, some of these submarkets are going to get repriced. And it's not going to be a positive pricing. It's going to be a negative. The people who are going to do the best are the ones that sell out first. It's kind of like when a stock market starts to decline. People start selling all the way to the bottom. The ones that sell those quicker are the ones that save more money. They save from the losses. I think the smart people in some of these neighborhoods are the ones that are selling first.
2 minutes.
Because the people that are holding out as all their neighbors start to sell and their neighbors start to go into foreclosure, what do you do if your house is flooded? You've got no insurance. FEMA's not going to write you a check. They're not going to buy your house out. The county's not going to buy your house out. And this class action lawsuit thing is not going to, it's going to take years for that to happen. What are you going to do? You got a flooded out house and a mortgage. What are you going to do? Oh, and by the way, so do all your neighbors. All your neighbors have mortgages. All your neighbors have flooded houses. The ones that had flood insurance are going to fix their houses. So let me ask you guys this. Those of y'all who did not flood, who have a neighborhood full of flooded houses, what do you think the value of your house is going to be when half of your neighbors that flooded, half of those houses are on the market?
1 minute.
Some of them are distressed. They were foreclosed. And some of them were put back on the market after they've been fixed. What are the prices going to look like? They're not going to be positive. So I'll tell you, when I'm looking at the chess pieces here on the board, people who are going to stay in their houses long term, this isn't a big deal. You're staying in your house more than 5 years, I wouldn't even worry about it. But those homeowners that are trying to move in the next 5 years, I don't know what's going to happen with prices. It's a high probability they're going to decrease as this thing plays out. We get back from the break. I want to talk more about flood houses, how to build wealth with real estate. And I'll take a couple of questions on Facebook. It's Jason Bible, Right Path Real Estate.
Mike's off.
Have you ever experienced the pain of trying to get MLS comps for your hot lead? If you've lost deals waiting for MLS comps, you can understand the frustration. How much would it help you if you no longer had to wait for a real estate agent to get you the info you need to close a deal? Propelio is a brokerage website that gives you instant 24/7 access to high equity lead lists and comps with access to a network of the top real estate agents. Get an edge on everyone else. Get a free 7-day trial today by going to getmlscomps.com now. That's getmlscomps.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas.
Hey, Richard, my bag doesn't, but this bad boy does smell like the ballpark.
What you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts. Benchmark Insurance.
I'm kind of debating. Should I not watch this until they win the World Series?
That's 281-569-4353. Or online at benchmarkbroker.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Rehab loans, conventional loans, FHA, and no-income documentation loans can seem scary unless you have the right mortgage company to guide you through the process. Since 2003, Noble Mortgage has been helping investors just like you. Whether rehabbing houses, buying your first home, rental, or commercial property, Noble Mortgage offers up to 100% financing. Call Noble Mortgage at 713-680-8100 or visit noblemoney.com. That's noblemoney.com.
Oh.
Selecting a foundation company and their
I'm
product
supposed
for
to be
repair is a lot like a game of chance. You simply don't know
Dallas
what you're gonna
tomorrow?
Get. The foundation repair industry as a
Is
whole
that thing tomorrow?
doesn't carry a license, nor is it regulated.
It's got to be tomorrow, right?
However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825 or you can reach us online at foundationcheck.com.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is.
Oh, it is tomorrow.
But a
Okay.
comprehensive analysis of the market.
Rustic
Next
is
Gen
tomorrow
call
night.
at
All right.
713
I got it.
346-9911.
Yeah, for those of y'all in Dallas, I'll be up in Dallas for the real estate happy hour.
Are you a
at the
realtor or
Rustic,
seller that is
5:30 to
concerned
8:30?
about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com.
All right, we're coming back.
That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
Call Jason at 713-785-1817 and look for us on Facebook Live at facebook.com/RightPathRealEstate.
Hot mics.
Welcome back. Welcome back, Jason Bible, Right Path Real Estate. Got a couple questions here. Hey, Jason, how are you finding these investment properties and paying less? Are you marketing directly to sellers, or are you buying them from the MLS using a realtor? Yes to both. Buy houses on MLS. We buy them from wholesalers. We buy them directly from homeowners. We buy them from just about anybody. Buy them from attorneys. Buy them from all kinds of folks. Here's what I'll tell you. Let's talk about MLS, which is HAR here in Houston. Most real estate investors make a pretty critical mistake. They They just make what I like to call blind offers. They make blind offers to real estate agents. Hey, I'll buy this house. They'll just send these contracts out, and that's not how it works. It doesn't work like that. You got to invest. You got to put in some time. So one of the things we talked about at the weekend retreat: how to market for deals, how to find good investment grade real estate. We got a weekend retreat coming up Friday, Saturday, Sunday. Support at rightpathrealestate.com if you want to sign up through Veronica, or you can sign up on our website, rightpathrealestate.com. Sign up there. The event starts Friday through Sunday, and we cover every aspect of real estate investing. There's actually 8 modules that we cover throughout the entire weekend. And these 8 modules are critical to building your real estate business. If you're missing one of these, you're not going to be successful. But it's essentially 8 steps that are required to build your real estate business. A lot of people ask me, Jason, is it really that simple? Yes, it is that. This is not. Look, if you got a good work ethic, this business isn't rocket science. I mean, it's just, or like Tom says, it's not rocket surgery. I mean, it's not. It's buying single-family houses. You just have to know the certain couple of things that you have to do in order to reach your goals. For those of you who will be at the weekend retreat, a little homework assignment. If you're at the weekend retreat, homework assignment. Guys, know what you want. And what I mean by know what you want, I don't mean how many houses you want to buy. What you want out of life. That's really what I'm trying to get at. I want to thank everybody for listening. Tom will be on the radio show tomorrow for Build Your Team Tuesday. And I will see you guys with Tom in studio Wednesday morning. Thanks for listening, guys. This is Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
All right, you too. Thanks.
Bye.
You've been listening to Right Path Real Estate Radio. Find Jason and